A very good morning to all our viewers and welcome to Opening Bell. I am Stacy Pereira and I'm here to take you through all the news and cues that could impact your trading day. And well, we've just concluded a very encouraging Muhurat session that took place last evening, kick-starting Samvat 2080. So let's get you a quick recap of all that went down over the weekend. Well, we did see overseas globally where major averages on Wall Street, they did gain for the second consecutive week. Although if you look at right now, Wall Street futures are trading lower, and this has come post that Moody's downgrade. Now, what is all of this about? Moody's, the rating agency, has gone ahead and revised the rating outlook for the US to negative from stable, and which is why you're seeing those futures really trade there in the negative. But on Friday, we did see all the tech stocks there on Wall Street really outperform. We saw Microsoft also touching an all-time high. All the likes from Alphabet to Amazon, all of them were trading quite positive on Friday. But if you look at Asian markets today, well, they are starting the week on quite a mixed range. We're getting mixed signals from most of the markets, although Singapore and Malaysia also closed for the Deepavali holidays. So we're seeing mixed trade on Asia. GIFT Nifty right now indicating quite a higher start for the Indian markets, pretty much taking off hopefully from what we saw in Muhurat trading. If you look at the commodity side, we did see oil also settle quite higher, but 4% down for the week gone by. Brent trading somewhere around $81 a barrel. So quite interesting to see how Indian markets are reacting to that cheaper crude oil. But if I have to give you a recap of yesterday's Muhurat trading, we did see Sensex jumping about 355 odd points. Investors have grown richer by 2.22 lakh crore rupees just from yesterday's trade. And we've seen quite the markets also being in that resistance zone of 19,450 to around 19,500, the Nifty in fact, and that has managed to sustain. So now we're talking about, are we going to be moving upward from here, or we're likely to see some more consolidation, some more pain, which is what we're going to be talking with all of our experts. But if I have to give you the trade setup of how we saw institutional investors, well, the foreign institutional investors, they went on and sold shares worth about 261.81 crore rupees. This on November 10th. This is the provisional data that NSE puts out, whereas the domestic institutional investors went ahead and bought about 222.64 crores on November 10th. So, and like I told you, 2.22 lakh crores is what we saw investors gain on yesterday's Muhurat session. So, with Samvat 2079 back of us, let's see what we have ahead. And in fact, we had quite a bit of historic performances in that Samvat. We saw the Nifty reach that 20,000 levels on September 11th of 2023. We saw Bank Nifty also touch new levels. So is the Sensex. So what is left to come? Let's discuss those technicalities and what the charts are really saying. Even the broader indices for that matter yesterday performed really well, outperforming the benchmarks. We could say both the mid cap, small cap gaining more than 1% in that Muhurat session for 1 hour that takes place on Deepavali. But let me bring in my guest to do that. And joining me first up is Prashant Sawant from Catalyst Wealth. Thanks so much, Prashant, and happy Deepavali to you and also to all our viewers. In case I missed that earlier on in the show, I'd like to wish all of our viewers a very happy Deepavali. But Prashant, let me get to you and ask you the levels that we're seeing. We've managed to hold on to that resistance that we've been considering for so long, and now being that really crucial support of 19,500. Are we marching forward from here, or we could see some bit of volatility left ahead for the markets?
Yeah, a very good morning, Stacey. Happy Diwali to you and happy Diwali to all the viewers. So I think if we talk about Nifty specific, yesterday we had a good gap up, but I think if you look at a pre-open now, it is kind of fizzling out, not showing the strength it showed yesterday. If I were to talk about Nifty futures, we closed yesterday at 19,540 and 19,550 to 600 zone happens to be a major resistance. So the next 50 to 100 points are going to be extremely difficult for the index, that is for Nifty. On the downside, the strategy I would like to recommend is, if anyone is carrying longs, trail strictly with a stop loss of 19,450 in futures, which means if there is any reversal, your profits will be booked at a very decent level. And from a trend reversal or a trend strength perspective, 19,300, 350 zone is a make or break level on positional basis in futures. As long as that is intact, I think the structure of consolidation to buy on dips can be looked after. But if we break 19,300 zones in futures, then a major weakness may creep in and we may retest the 19,100 to 19,000 zones. As far as Bank Nifty is concerned, I think yesterday we closed at 44,050 approximately in the futures, and 43,800 happens to be a make or break level. Just like I said, 19,300 for Nifty, 43,800 is the level for Bank Nifty. On the upside, 44,200 is a major resistance. If we break out of that, I think one stock which needs to definitely contribute here is HDFC Bank. It has been consolidating and underperforming for a long time. So I think I would be watching that closely. If that moves, we may see a good breakout in Bank Nifty. If that does not support, then I think we may test those levels of 43,800. As long as they are intact, you can look at the buy on dip strategy. If that breaks, I would definitely stay away from both the indices. So for the week going ahead, 19,300 and 43,800 in futures are the key levels for both the indices.
Right. So Prashant is seeing some more bit of volatility which is likely to come since it's going to be a truncated week. We are not, markets are going to be closed tomorrow for this Diwali holiday. So we are going to likely see more volatility going ahead, and which is why maybe now to look at the indices might not be a good time, is what Prashant is also suggesting. But there's the bell and you can see on your screens where the markets are. Like we were saying, we were expecting that bit of, little bit of negative sentiment, we could say, but the Nifty there trading about 0.3% lower, opening rather on that lower note, but also, slipping below that 19,500 levels that we were so hopeful that it will manage to hold on to. But this is just the initial, the forecast that we see of what can happen to the trading day if it manages to hold on to these levels or slip further. And like our guest was pointing out, that there is likely to see some bit of, pressure on both the indices. Even the Bank Nifty, for that matter, they're trading 0.3% lower, gone below that 44,000 level that it had managed to reach yesterday. Broader indices also feeling that bit of pain, we could say. Mid cap, although yesterday was quite a good day for both the mid caps and small caps, and that's where we've been seeing that bit of swings. Small cap indices there as well, down about 0.2%. But this is just the initial 2 minutes where we get to see how the markets are reacting, and it's mostly due to these global cues. Now, like I told you, Moody's is the one that went ahead and downgraded the US government, and which is why even a Nifty IT index, for that matter, is the one going to see a lot of pressure, because their markets, their whole business is surrounded from what they export to international markets like the US. If we look at the pharma indices, that one also coming under some bit of pressure. FMCG, now this consumer play is what we're really hoping this festive season really picks up. But the FMCG index for now also trading a little under pressure. Metals too coming a bit under pressure. We did see the IIP data that had come out over the weekend, and that one showed that there is some bit of momentum that is picking up. Today we have the CPI numbers that are going to come in and give us a better picture of where inflation stands at the moment. But if you can see, most of these counters that are really dependent, the rate sensitive ones, just like auto on your screen right now, that one also trading much under pressure and trading lower by just about 0.18% down. Realty index, which has been quite that front runner this whole time for giving out quite a bit good returns if you to look at it from the YTD basis, but also another one that comes under that rate sensitive zone, which is seeing some bit of pressure right now. So most of the sectoral indices, we can say, also has opened this morning in the red. So all of them getting that bit of pressure from the benchmarks. But let's also look at the stock specific action and who's making to the list of top gainers and losers in trade today. Well, there on your screen you have the top gainers in Eicher Motors. This one definitely after its Q2 results, and we'll be giving you more on what its results have come out to. BPCL there, Apollo Hospitals, another one. that is nicely trading in the green. Sun Pharma, Coal India again there after its results. They're on your screens in the green, as well as Hindalco. So a couple of heavy, the metal and those counters, even pharma counters, all of them making the list on the gainers list. But let's look at where the weakness is in the market today. And for our top losers there on your screen, Adani Enterprise, HCL Tech, as well as Bajaj Finance. Now these ones have been repeatedly making it to the list, we could say, for various reasons. TCS as well as Nestle also seeing some bit of pressure today. So we'll be looking at what really comes off it. But also most of these counters, like I was saying, are in the news because we saw their results and there was, they are making headlines. Let me take you through a couple of those numbers that we saw. Well, if I have to take you through ONGC now, that one put out its numbers. This is the state-run oil and gas exploration company, which recorded a standalone profit of 10,216 crore rupees for this quarter, whereas which has really fallen by about 20.3% compared to a year ago. If you look at the gross revenues, those two have declined to 8.2% on a year-on-year basis, coming in at 35.162 crore rupees. Now, CLSA has gone ahead and still given a buy call on ONGC. They've raised the target price to about 225. Now, they say the earnings are pretty much in line and coming on the back of that better realization that we're seeing, as well as the lower cost which has come in for ONGC. The declining production, though, may be then compensated with the upcoming projects that they have put forward too. So quite a good call coming in from brokerages as well on ONGC. If you look at Coal India, now that one too is the country's biggest coal mining company and has recorded about a 12.7% year-on-year growth. Consolidated profits have come in at 6,803.5 crore rupees. This for the September quarter. Revenue from operations has increased by 9.8%, and which is why you could see not that bit of, we saw the counter there in the losers list. Sorry, I beg your pardon. In the gainers list, Coal India was there. And Jefferies, in fact, has gone ahead and given an upgrade and to a buy call for Coal India. They've raised the price to about 385 rupees per share. And they say that the Q2 cash EBITDA has risen, which has risen by about 11%, is quite above their estimates. They've also seen volume growth of about 12%. And they say that the volume growth trajectory has improved and is likely to sustain. So which is why they're upgrading their FY25 and 26 earnings per share by about 18 to 42%. So quite a good call coming in there even for Coal India. Well, let me bring in Prashant once again and ask him, about PSUs as a whole. Well, we're not looking at individual companies, but PSUs as a whole are showing us a different kind of picture. Everyone would have a rather, a skeptical view on them. But how are you looking at, let's keep PSU banks aside because I think that's a separate game. But what about these other players, the bigger players for these PSU stocks? How should one be viewing them? Prashant, we're not able to audio.
Yeah, so Stacy, if I look at PFC and REC, I think they have completely outperformed the market. Every and any dip in the stocks has been bought strongly. And after every dip, which looks like a correction, the stocks have gone on to make a new high. So I think these are stocks which need to be added on dip. These are not the levels to enter. We need to wait for a good dip in both the stocks, but any and every dip in both these stocks, along with Coal India, can be bought strongly. I think these are the three which are on my radar, and I'm waiting for a dip on them. Any dip on these three stocks can be bought, and they need to be at least kept for a couple of months. I think every month these stocks have been outperforming after a dip. So I'm waiting for a dip, as I said, and if you get a dip, if I will talk stock specific, PFC in the region of 285, 290 would be a great buy, and one can hold with stop losses around 275 for targets around 330 to 335.
Right. So PFC for you and Coal India as well as REC. In fact, REC is also in the news today. It's trading ex-dividend will start. So give us your view on that specific counter and why should one be looking at it. And like you mentioned, you should buy on dips but wait for those right levels. So is that also for REC?
Yeah, so the consolidation zone for REC happened to be around 300. And every time the stock was kind of facing stiff resistance at 300 odd levels. And we were seeing a decent correction. It was range bound between 300 to 260. As soon as we broke out of that 300 zone, we have quickly seen a 10% rally in around a week's time, which is a very strong rally. I think the level now to look out for would be in the zone of 315 to 320. A dip to that zone would be a great buy for this stock. One needs to enter with a stop loss at 305, and then one can look at targets around 345, 350. So any dip to 315, 320 zone can be a good buy for this one.
Right. Prashant, do stay on with us. Another stock that is going to be a buzz is going to be the Royal Enfield maker, that is Eicher Motors, because that one too has registered its highest ever quarterly profit, revenue and EBITDA for the quarter of September, their Q2 of FY24, that is. Now, the net profits have increased by 55% on a YOY basis, coming in at 1,016 crore rupees. This is backed obviously by the healthy operating numbers. The revenues from operation too have grown by about 17%, coming in at 4,115 crore rupees. So Eicher Motors also quite interesting, and in fact overall auto, we've been seeing most of them come with some really spectacular numbers this quarter, and also coming at the time when the festive season in fact has moved to Q3, and which is when they were hoping that whole revival comes in. So let me get in Prashant and get his view on auto as a pack. Although today the auto index is trading under some bit of pressure. Overall, how should one be looking at the auto sector, and which stocks would you be suggesting at this point from this pack?
So I think, Stacy, as we pointed out, Eicher is showing a very strong breakout. But I think these would not be the levels to enter. Those who are holding the stock and continue to hold a stock which is on my radar and looks good at the current levels is Tata Motors. I think it's currently trading roughly around 650 spot. So one can add this stock between 645, 650 with a stop loss at 630. And I'm looking at levels around 680, 685 eventually, which happened to be the previous resistance. A big breakout would definitely be seen if we close above 685. But currently we can still get going with stop losses at 630, add every dip and hold for targets around 685.
Right, Prashant. Well, Prashant, before I let you go, I definitely want to ask you, we're seeing a whole lot of IPOs also coming in. Today, we have Protean eGov Technologies. Now, this remembers a Mumbai-based e-governance solution company and is set to list. And most of the grey market premium, at least of what we're saying, is saying that it might see a premium or in double digits. And we're hoping that it will. Remember, the issue price is somewhere between 750 to 792 on the upper side of their price band. So I want to get Prashant's view on IPOs in general and what we've been seeing, the flurry of activity in the primary markets, and especially for retail investors who do not know how the volatility, in fact, that the primary markets hold. So how should they be looking at not just Protean, but IPOs in general, and whether there is too much froth in the primary market at this point?
So I think, Stacey, that's a very good question. And if I were to just simplify it without from a absolute layman's perspective, I would say first thing is if whether you are allocated an IPO. Most of the times you are not allotted.
Right.
So even if you apply, the question does not arise what you have to do with it. Second thing, if we get something like a Paytm or what happened with Mamaearth, I think one thing which you need to know is in a stock market, the basic rule is if you're going wrong, just exit. So that rule, if you follow, I think you would get much of a shocker in an IPO. And if you allotted a strong one, I think you can definitely ride it. Like we had in Paras Defense and a lot of other IPOs last year were good. This year it has been a little muted market. But I think if you're applying and if you get the allocation, I think you can definitely ride the rally. Or if there is a knee-jerk reaction, just exit on day one. Follow this simple strategy. And I don't think you will see much of a dent in your portfolio.
Right. Well, thanks so much, Prashant, for that, for giving us your time this morning also and giving us the overall perspective of how we're going to see markets. Prashant says that maybe this week we need to be just waiting and watching it out. Anyways, it's going to be a truncated week, so we can pick up from there or we can go lower depending on what are the externalities that will also work. And in fact, let's talk about the fundamental picture for India, because we've seen quite an interesting way that the economy has moved. In fact, today we're going to see our CPI numbers. We've seen what the IIP numbers are already suggesting, and which is what really shows that India is at bright spot. Now, just overnight, yesterday, we saw Moody's go ahead and downgrade the US economy, which is really, putting out those tremors right now for the other markets elsewhere. So let's discuss the fundamental picture for India, and to join me to do that is Mayuresh Joshi from William O'Neill and Company. Good morning, Mayuresh, and wishing you a very happy Diwali and a prosperous New Year. Give us your initial view first on what has happened in the US with the Moody's downgrade. What does that really mean? And what are the ramifications that other, emerging markets like India would also have because of that?
Morning, Stacy. Shubha Deepavali to you on all your viewers at Moneycontrol as well. Hoping this year is full of peace, health, wealth, and prosperity. When it comes to the downgrade that happened to the US markets a couple of days back, obviously you're going to see a knee-jerk reaction onto the markets itself, because this is the second agency which has downgraded the markets at this juncture. And for obvious reasons, you've obviously seen household debt ballooning. You've probably seen fiscal deficits go out of control as far as the US markets are concerned. And because of elevated interest rate structure in the US markets itself, corporate earnings are definitely going to take a hit in the next few quarters. So taking that into stride, the markets might show a knee-jerk reaction as far as both the Dow Jones and the Nasdaq is concerned. How long will it be sustainable? Because a lot of other data points are probably coming out very, very strongly at this juncture, which again gets offsetted in terms of the Fed chairman statements that if needed and if data points suggest, we might hike again. So I think there is a lot of uncertainty surrounding macros as we speak for the US markets. Even the European markets are going through a tough phase as we speak. A lot of Asian markets are going through the inflationary phase as well. And therefore, India probably stands out on most of these parameters. What you've probably seen in terms of the correction in crude is a healthy blessing in disguise. It reduces our import bill to a large extent, and to a large extent also the current account deficit and inflationary concerns that were cropping up. GST collections, tax collections, you're probably seeing PMI data points, IIP data points remaining stable at this juncture. And the discretionary spending patterns which are coming out of the Dhanteras, car sales, which are improving or remaining stable every passing quarter as we speak, is a very good sign for both macros as well as micros in terms of corporate earnings for India holding up. So as you rightly pointed out, Stacey, I think India is one bright spot at this juncture. And therefore, a large structural downside for the Indian markets probably looks unlikely, assuming and considering all these scenarios.
Right. Mayuresh, let's talk about crude, because that is something that, will perhaps obviously not directly show in the CPI numbers that we have expected to come later today. But tell us, on the overall India inflation picture, do we have much to cheer, and will that really show, does it show in terms of the consumption that we are seeing that demand really picking up, and perhaps, likely to see that in the following months' numbers?
So it acts with a lag, but I think to a large extent, if crude stays in the range that it is beneficial for an economy like India, because we do import crude to a large extent. And we had the benefit of importing cheaper crude from Russia in rupee terms. And therefore, I think with crude prices expected to stay low or probably in a range, that will certainly benefit us, as I said, from a trade deficit perspective. And with the other numbers, as far as the fisc is concerned, with tax receipts holding up pretty strongly, I think that points out to a very strong picture as far as India Inc. is concerned. But the only risk factor that probably comes through is a little bit of an increase in borrowings because of the rationing program that the government has probably extended by 5 more years. But again, I think that would be taken into the stride. And to a large extent, again, the kind of FDI reserve that we've got offsets it. So if you probably look at the crude equation itself, Stacey, at this juncture, the crude staying low, extremely beneficial for India, both in terms of our trade deficit, current deficit, and with crude prices staying low, as I said in my opening remarks, the inflationary pass-through, which probably happens in terms of transport, in terms of consumption of crude derivatives for various industries, that probably comes down, which is a huge push through and a positive plus point as far as India GDP and corporate earnings are concerned.
Right. So where are we likely to see that inflation number later this evening, and what is that comfort level, and what will that then, keep Governor Das's monetary policy and which direction that is headed, because that will really change much for a lot of the rate sensitives that we are seeing, like be it auto or realty, all of those. So how will that really work out, and where are you pinning that number at, and will this be then take the monetary policy also to another wait and watch zone?
Yeah, so it's going to stay that way because I think the global conditions are very fluid as we speak at this juncture. But for the Indian context, the government has made it very, very clear. I think the targeting is at 4%. I think there is no two ways about it. So the band of +2, -2 probably is something that guides RBI in terms of policy making. But I think that is the target that RBI is probably looking at. But again, I think they're very supportive in terms of growth. So the kind of liquidity management that RBI has probably done in the past few months, the past few quarters, has been commendable. I think no other central bank has probably been as responsive as RBI has been. And therefore, if you balance out the inflation versus growth, the debate, I think it has been balanced out pretty well. Obviously, it's going to be a wait and watch. But as data points suggest, we're not looking at any kind of hyperinflationary numbers keeping in. There are no odd events that might ensure that this number probably creeps on the higher side. And therefore, the supportive policies that RBI will also do, in lieu with what the government obviously does at its end to support growth, will be very, very supportive for the markets as well.
What about the IT sector now? With what's happening in the US, it looks like, maybe a recession is coming somewhere down the line. Maybe we do not know yet into 2024. But what would that really mean for the Indian IT sector? We've already seen quite dismal earnings, if to say the least, if we have to, from that whole IT pack. So how is that really going to change perhaps for them, or do we see the likes of an Infosys, TCS really having a turnaround anytime soon?
No, so I think if you clearly bifurcate, Stacy, between the large cap and the mid cap IT, large cap IT is disappointed to a certain extent in terms of expectations of earnings delivery. But again, I think in terms of what expectations is the market's putting through, if there is a soft landing or a recession which is not as harsh, the discretionary patterns will come back in the first half of the next financial year. Obviously, for large cap IT companies, you're talking about multi-million dollars in terms of orders, which is a large order win. A few companies have reported decent order wins in the first half. How the patterns play out, the third quarter is typically a quarter which is marred with furlongs, Christmas holidays, so on and so forth, so less working days. And the fourth quarter in our context is where typically the discretionary spending patterns get decided. So in this scenario, I think maybe a couple of quarters of pain still for the large cap IT companies. But the mid cap IT companies have probably delivered very, very strongly. You look at a whole host of these companies where management commentaries have remained extremely strong. The order wins in the bucket sizes that they probably look at, 2 million to 10 million, still coming in, no pricing pressure seen, no demand or any utilization issues seen, and with wage hikes also round and done and dusted with, EBIT margin should be stable in the coming few quarters as well. The only arguments that remain against mid-cap IT is valuations. Obviously, valuations at late-stage basis, as we see at Markets in India, are a little bit on the elevated side, which probably prompts that purely from this perspective, maybe large-cap IT can provide better opportunities in the next couple of quarters. But anybody who's riding momentum can definitely ride momentum with its mid-cap IT.
Right. Mayuresh, before I let you go, let me just get a quick idea of what themes or rather sectors that we could share with our viewers that are looking good in Samvat 2080. This is obviously a long-term view. So what would be your picks for this Samvat?
So I think what we've got on our buy watch list is a few areas like capital goods, stroke infra. We've got some urban discretionary companies as well, because that's where we believe that the India domestic story, in lieu and in spite of what happens globally, should still continue going strong. So Bikaji Foods, as an example, remains on our buy watch list. It's a clear case where volume growth along with expansion in capacities will drive gross margins and EBITDA margins as well. Very strong balance sheet with very less leverage. And therefore, a few of these discretionary companies can continue doing well. Within the same theme on BFSI, I think this sector can still continue doing well. And Axis Bank probably also remains on our buy watch. It's very strong set of numbers. NIM expansion year on year, quarter on quarter, you've seen a reasonable amount of advances and deposits growth. And a lot of parameters in terms of asset quality pressures coming up. provisioning remaining extremely strong, remain very, very robust for entities like an Axis Bank, something like a Credit Axis Grameen as well within the NBFC space, which remains on our global focus list. So I think some stocks related to consumer discretionary, capital goods, stock infra, and selectively on BFSI. I think these stocks will still continue doing well as our domestic economy functions.
Interesting picks there, and also from quite a wide array, we would say, right from BFSI and financials to even the discretionary names which otherwise would not randomly come up on our list. But thank you so much, Mayuresh, for joining us this morning, and hope you have a great festive season. And to all our viewers as well, wishing you all once again a very happy Deepavali. But with that, it's a wrap and goodbye from the entire team that puts this piece together. Thanks so much for watching, but do please post in your feedback for us in the comment section below, and follows on the bottom of your screen. And for the rest of the updates, stay tuned to moneycontrol.com as well as the Moneycontrol app.